What's good, everybody? I got a banger video for you guys today. It's for everybody that wants to start trading stocks and or you just want to learn a little bit more how to start trading stocks as a complete beginner. Let's get started. So, warning, I'm not a financial advisor. I'm not here to tell you guys what to buy, hold, or sell. I'm just trying to teach you guys how to trade stocks. So first, what is stock trading? So it's buying and selling shares of publicly traded companies to profit from price changes. So an example, buying 10 shares of Apple at $200 and selling them at $250 for a $500 profit. Not counting the fees. Some brokers got different fees, so read up on that to understand the fees and also understand that you got to pay taxes on that profit. So understand that a little bit more too. But why trade stocks? So potential for wealth growth, passive income, or learning financial markets. With that being said, you can make money day trading, swing trading, and having a long term. I recommend everybody to have a long term because it is just a safe. Honestly, I think everybody should have money saved basically. And basically, you're just putting your saved money to work. Only if you guys understand the markets and don't buy stocks too high. Historic average return of the S&P 500 is 10% annually before inflation. And honestly, I think the last 2 years it was over 20%, but with the AI hype and stuff like that, so keep that in mind. Who is this for? So beginners with no prior experience looking to invest small amounts, $100 to $1,000 and or just more. And also it is also for, maybe intermediate or just traders that want to up their knowledge on the overall stock market. Mindset for success. So honestly, patience is probably the biggest one because honestly, if you don't have patience, you can FOMO a lot of trades. I mean, FOMO kind of counts with discipline too and willingness to learn. You always have to learn. I think learning, man, you got to learn one new thing a day. You got to believe that. But honestly, learning and adjusting to everything that's going on. Avoid get rich quick mentality because honestly, man, that could set you back further if you try to rush the process. So never try to rush the process. Have patience and focus on long-term growth. So key terms: stock, ownership of a company. So basically one share of Tesla, tiny ownership, but basically that is what a stock would be. Broker, platform to buy and sell. So like Robinhood, Fidelity, Webull, stuff like that. Portfolio, collection of your investments. So like, let's say if you have one share of Tesla, one share of Nvidia, that is your portfolio. Bull market, rising prices. Bear market is falling prices. So understanding the stock market overall. So first off, what is the stock market? It is a marketplace where buyers and sellers trade shares of companies, major exchanges like the New York Stock Exchange and the NASDAQ. Example, Tesla trades on the NASDAQ and Walmart is on the New York Stock Exchange. How stocks are priced, so supply and demand, more buyers and sellers, price rises, influenced by companies' performance, news, and economic factors. So for example, if Apple releases a new iPhone, demand for Apple shares may increase. People are going to buy Apple shares more, thus bringing the price up more. And let's say, for another example, to the downside, let's say if the new Apple iPhone just blows up or something, you're going to see people selling out of this stock crazy and the price is going to start dropping. Types of stocks, so you got blue chips, established companies like Microsoft, Coca-Cola. Growth is high growth potential, so like Nvidia and Tesla. Dividend, they basically just pay you for owning shares. So example is like Johnson & Johnson, they pay 2.5% annually. So you'll get, let's say if you invest money, you'll get 2.5% back into your investment. And you can either get that with a cash out and or you could just get that with shares. Market hours, so US market opens at 9:30 a.m. to 4 p.m. and is open Monday through Friday. Crypto, I think it's 24/7. Pre-market 4 a.m. to 9:30 a.m. and after hours trading is available. So this is if you guys want to expand a little bit more. I made a course, it's $199. It explains a little bit more and it just gives you more in depth and you can have this side by side while trading. I can guarantee you that you'll make your money back within the first day. First link in the description below if you guys are interested. If not, let's get on with the video. So now it's time to set you guys up for success. So one thing in anything, define your goals. So short term, save for a car in 2 years versus long term, your retirement plan. So an example of this, invest $500 to grow 1,000 in 5 years for vacation. And basically that's just saying that in 5 years you're going to flip that 2x, which honestly should be very easy, especially like 5 years. If you just put that into a stock and get that back. Understand risk tolerance. High risk could be in growth stocks, volatile but high potential. But honestly, volatile and high potential, you also have volatile to the downside. So you have high potential and then you also have high losses that you can take. Low risk, it could be dividend stocks or ETFs, more stable. They kind of just move kind of the same. Example of 25-year-old may tolerate more risk than a 60-year-old, just because a 60-year-old is closer to retirement and a 25-year-old is still working, they're still making money and stuff like that. So honestly, that's kind of the example. Start small, so begin with $100 to $1,000 to learn without significant loss. You can also paper trade is what I recommend doing, especially if you get into day trading to swing trading, because that is a little bit more risky. Use fractional shares, so buy zero point 0.5 shares of Amazon at $90 instead of 3,600 for one share. And that's just an example. I know it's not trading at that. Emergency fund first. So this is very important. Have at least 3 to 6 months of living expenses saved before trading. If monthly expenses are 2,000, save 6 to 12,000. Just because you have that emergency fund, you don't want to have to cash out of your portfolio or anything like that in case something happens. So next one is choosing a brokerage account. I got links for Robinhood and Webull. I personally use Webull for my long terms, and I use Robinhood for my short terms, like day trades and stuff like that. I'm not gonna lie, Robinhood has less fees and stuff like that, but it's not really a competitive day trading platform. But I'm personally doing sometimes day trades and sometimes, overnight trades, swing trades, stuff like that. And I'm not really, buying and selling fast. I'm just like, okay, I'm gonna put a limit order, so Robinhood is there for, its ease of use, and it's kind of the Gen Z platform, so understand that. But it's basically a platform to buy and sell stocks. So those are just examples. Key features to look for: so low and no fees, many offers commission-free trades, user-friendly interface, ideal for beginners. So I do recommend Robinhood for that. Educational resources, so tutorials and stuff like that, demo accounts. I'm not gonna lie, I don't think Robinhood really has too much of this, but if you use like Webull or TradingView isn't really a platform to trade, but it's a platform to look at charts, and they have tutorials. They have literally like everything that you really need to know to get started with trading, and you can link your account to it. Trade off of TradingView in general. Example, Fidelity offers zero commission trades and robust research tools. So Fidelity is a great one too. Not even gonna lie, you have zero commissions and they honestly help you trade a lot. So that's another recommendation. So what is popular? So for Robinhood, of course, simple, mobile first, no commissions. They are kind of itching over to a website version to help you trade better with your computer. It's not too bad. I personally just use TradingView for charts and Robinhood to basically buy whatever I want to buy. I mainly do option trading, but honestly, penny stocks and stuff like that is still not too bad. Webull, it has free trades, advanced charting, and good for active traders. Webull isn't bad. Their charting is pretty decent as well. And honestly, I think Webull is a great one to start with, but it's kind of more like you got to learn a little bit more. Robinhood is basically very, very simple. So opening an account, of course, you got to be 18 plus, but you can get like a account through your parents somehow. But I personally never did this. Honestly, you could probably just ask ChatGPT, he'll help you out, But you need your social security number, of course, and a bank account to deposit your funds. Process, basically, you just sign up, deposit funds. And honestly, man, one thing that I didn't really account for is you have to verify your identity for most trading platforms. And honestly, it might take a while or it can take a few minutes. So keep that in mind overall. Example, open a Robinhood account, deposit $200 and buy your first share. So let's talk about the basics. So to see the company's health, you want to look at their revenues, earnings, and how much debt they have. If you look at penny stocks, for example, penny stocks, they have a lot of debt, little revenue, and little earnings, and it just looks horrible to trade with. But if we look at stocks like Apple, they have a lot of cash flow, lower debt, a lot of revenue, and their earnings is crazy. So honestly, just keep that in mind. Key metrics is the PE ratio, price to earnings, and the EPS, earnings per share. Example, if Coca-Cola's PE is 25 and Pepsi's is 20, Pepsi might be undervalued. So honestly, they're both kind of the same company. Of course, they're different, of course, but honestly, just looking at, they basically make the same drink and stuff like that, and you're kind of just comparing, and Pepsi just looks like the better undervalued stock. Getting in the technicals, study price patterns using charts. So like I said, TradingView is probably one of the best platforms you can use for charts, but you can also use, Robinhood's charts. You can use Webull charts. Webull isn't bad neither. Webull does have better charts than Robinhood, but honestly, just keep that in mind. Just do your own research on what you like more, because it's kind of personal preference. But you want to look at the moving average. A lot of people use moving average, the VWAP, the MACD. I got videos on this if you guys want to check those out, and or Just watch, just Google what's the best ones. Supports and resistance. This one's a little bit harder to check out, but I make daily videos telling you guys the supports and resistance of certain stocks. But an example, if Tesla stock price bounces off the 800 multiple times, honestly, 800 is a key support level. So resources for learning. This is one thing that I kind of, struggled with finding the best resources for learning. But Yahoo Finance is probably my main one, but you can use Yahoo Finance, Google Finance, and Investopedia. I personally use Yahoo Finance. I just type in Yahoo Finance and look at all the news and stuff like that. That's basically just for following news, and honestly, it gives you tips and tricks on the side. But honestly, staying updated with the news overall, especially for your specific stock that you're invested in, is great. Paid TradingView, like I said, $15. They have a free trial, but honestly, the free version of TradingView is honestly great too. You kind of just get a little bit of limits. You can basically learn a lot off of TradingView on the free version. So keep that in mind. Start simple. So on 1 to 2 metrics. So honestly, the PE and revenue growth, and then you can learn more things as you go. Example, checks Apple's quarterly earnings report on its investor related page. So let's talk about building your first portfolio. I made a long-term course too to explain more about long-term trades, how to trade long-term, and I gave you guys 40 free stocks on there. You will make your money back. So if you guys want to check that course out, you guys can, but I can give you guys examples and good stocks to get now. So spread investments across sectors. So you want to basically diverse your account. So have tech, healthcare, and some consumer goods. Example, $500 portfolio. You'll have $200 in SPY, $150 in Apple, and $150 in Pfizer. That's basically just a diverse portfolio, has multiple segments and stuff like that. ETFs is going to be the safest stock to invest in, but slower returns. So let's say for example, Nvidia and SPY back in the good times, SPY went up I think 26%, but Nvidia went up like 147% that year. So just keep that in mind. You'll probably make more money on individual stocks, but it'll take more time and effort finding the right one and more risk. ETFs and individual stocks. So ETFs is basically somebody else investing into these stocks. So like, the S&P 500, they're going to have the 500 best companies overall. They're going to add companies over time. And honestly, somebody else is basically managing a diverse portfolio. Pros, low risk, instant diversification. Example, $100 in Vanguard gives exposure to 500 companies. So honestly, it's a great way to start. How many stocks? So start with 5 to 10 stocks or 1 to 2 ETFs to keep it manageable. You don't want to manage too many stocks if you don't got that much time, because honestly, management is the biggest thing to making money. Example portfolio. So with $1,000, you'll have 300 in this S&P 500 ETF, 200 in Microsoft, which is basically tech, Johnson & Johnson, another 200, and that's healthcare. $150 in Walmart, and that's probably one of the best consumer stocks right now, and then $150 in Procter and Gamble, and that's consumer section. So let's talk about placing your first trade, man. We're already on this step. So types of order, you have a market order, so you're buying and selling at the current price of the stock, whatever it's selling at. And then the next one is going to be limit order, and you're basically setting the price that you want to buy or sell the specific price. So buy Apple if it drops to 200. And this is kind of recommended because honestly, if you look at the charts, you analyze it a little bit and you're like, it might drop back down to this level. This is basically you just having patience and waiting for the stock to drop at a better price. Because imagine you buy Apple at 200 and it goes back up to 205. You just made $5. I mean, that's not really that much earnings, but you're just buying it at a better price. So later on, you can make a little bit more money. Step by step trading. So log into your brokerage account, open up the app, search for a stock. So let's say Apple, for example. Choose order type, so you can do market or limit. So market is just whatever it's trading at, limit is whatever you want to buy it at. Enter the amount, so $100 or 0.5 shares. We're going to say that Apple is trading at $200 at this time, and honestly, just confirm the trade. It's done like that, it's like an Amazon buy. Example trade, so buy 0.25 shares of Tesla at $900, $225 total using a market order. I know Tesla's not trading at 900. Maybe in like a year or something it will be, but honestly, that's just an example. Track your trade, so monitor price changes in your brokerage app. Set price alerts, so it's going to notify you. So let's say if you did buy Tesla at 900 and you just want to stay updated, but you don't want to, look at the stock every 5 minutes, you can have notifications. I know Robinhood has it, Webull has it, TradingView has it. A lot of platforms should have it, and it basically just sends you a notification, hey, Tesla hit $1,000. I just want to take a little break and ask you guys to subscribe. We're almost at 500 subs. Let's get there. And maybe if we hit 500, let me get to 1,000. So next, man, managing risk. This is going to be big because you can lose a lot of money. So honestly, set a budget. Only invest what you can afford to lose. You know, don't put your rent into this or anything like that. Example, limit trading to 10% of your savings. So $1,000 if you have $10,000. It just basically eliminates the risk. Basically, you don't want to lose money and then quit on trading, because trading is honestly the biggest thing you can start. Stop loss orders, so automatically sell if a stock drops to a certain price. So example, set a stop loss for Apple at $180 that you bought at $200 and you just lost 10%, just in case, just to kind of eliminate maybe Apple dropping down to 150. You know, you only lost 20 bucks rather than losing 50 bucks. Avoid emotional trading. So honestly, it's called FOMO. Don't have FOMO. Don't stick to the hype too much. Sometimes hype can get you a lot of money, but some people don't sell in time. Stick to your plan. Have a plan. This is probably the biggest thing ever. If you want to make 50 bucks, make 50 bucks. If you see it go up, you know, and you're like, it's going to keep on going up. And then now next thing you know, you're negative, you know. Don't panic sell during dips, because sometimes you might dip and then the stock goes back up. So honestly, don't panic sell. Just have your stop loss set. If it hits your stop loss, okay. But then let's say it dips and then goes back up, now you're back in a profit. Example, if the market drops 5%. So for an example, if the market drops 5%, review your portfolio calmly. Don't sell everything. So honestly, man, if you guys are investing into a long-term portfolio that you want to hold for 5 to 10 years, dips are going to be normal. And honestly, just stay calm and hold it, because in 5 to 10 years, that stock is going to be up. The worst that can happen is that it can go bankrupt, and that's when you should sell right away. just sell right away, because honestly, the company can either stop becoming a thing and then you just lose the shares in general, and or I mean, that's kind of the worst thing that can happen. That's what you're trying to prevent, you know. But stay informed, follow market news like CNBC. Bloomberg is decent, but Bloomberg is more paid. An example, if Federal Reserve raises interest rate, growth stocks like Tesla may dip. So now let's talk about common mistakes to avoid. Don't chase hype, like we said before. Don't have FOMO. Avoid stocks trending on social media without doing your research. Because honestly, sometimes, I mean, these are mainly pump and dumps. You see them pump up and then dump. And if you get in at the wrong time, you can lose a lot of money. But there is another way. You can get news early and then buy it early and then you sell it early. Okay, you don't hold it, you sell it early. But example, don't buy GameStop just because it's viral on X. A lot of people did that. A lot of people made money, I'm not gonna lie, but a lot of people also lost a lot of money. Don't overtrade. Trading too frequently increases fees and it kind of messes up your strategy. Okay, and then honestly, the more you trade, the more chances is higher for losing that trade. Example, buying and selling daily versus holding VU for months. Because I mean, honestly, the monthly is probably going to make you more money anyway. And sometimes, honestly, man, taking your time saves you money and time. Ignoring fees, so watch for hidden fees. So expense ratios and ETFs. And example, so VU's expense ratio is 0.03, and that's very low. Not by diversifying, so don't put all your money into one stock, because honestly, if Tesla falls, your whole portfolio is going to fall and you don't want that. Staying diversified just eliminates that risk. Tips to stay disciplined, so set weekly and monthly reviews and keep a trading journal and track your decisions, because honestly, you don't really think about it, but like writing it down and everything makes you think about what you did wrong, what you could change, what you can fix. I personally recommend doing this at the end of each trading day. If you don't have enough time, at least try it every single week. But every single day, man, it's going to help you get better. Next steps and resources. So practice first. So paper trading, which is basically you trading with fake money, but this is the best way to learn a strategy. Learn a strategy before you put your money in. Learn continuously, like literally maybe like set some time every single week and or every single day just to learn something, you know. Books, The Intelligent Investor, that is a great book. I recommend checking it out. YouTube channels, so like financial education, The Plain Bagel, and my channel, you know, if you guys want. Websites, Investopedia, Seeking Alpha, Yahoo Finance, stuff like that. And just, I mean, in general, YouTube is probably the easiest way. You can just chill, eat your food, watch how to trade, you know. Join communities, X groups, or Reddits. Are investing for tips and discussions. Honestly, I do recommend doing that. Set a routine. I mean, honestly, being consistent is probably the best, but check portfolio weekly, research 1 to 2 hours a week, and you can just set that up every single day. So basically, example, 30 minutes every Sunday reviewing earning reports on certain stocks and finding your next stock. Scaling up once comfortable, increase investments, So maybe $100 a month, $200 a month, whatever you can. I do recommend making a budget first overall and understanding how much money you can spend. Explore event strategies, so options, swing trades after 6 to 12 months. Just get used to trading and learning about stocks and reading the overall market first. Check out our Discord. Thanks for watching the video. Smash the like button, subscribe if you guys are new. I make daily videos updating you guys on the stock market, teaching you guys how to trade, becoming financially free. So smash that sub button. Let's get 500 subs. And I appreciate you guys for your time. Peace out.